just before I start, I just want to highlight that, we are an Aussie equity funds and we only invest on the ASX. But in order to understand where markets are going, you have to really focus on the US economy and the US equity markets. If you don't understand that, well, then you don't understand how the markets work. But essentially, everything revolves around the US economy and their markets. And so if you understand their economy, their markets, their interest rate cycle, and so on, and you can sort of anticipate what's happening there, that's what's going to drive investor sentiment in Australia. And if you pick the right companies, then you're going to do really well. So, as I spoke about before, about 2022, that bear market was really driven by high inflation and very aggressive rate hikes. And all those risks that drove markets down 2 years ago, that's all basically subside. And now, we pretty much have inflation in the US under control. In Australia, we're probably about, 6 to 9 months behind the US. In the US, as of a month ago, the core inflation moved down to around 3%, which is sort of at the higher end of what they're sort of targeting. And we have, many economists in the market, and also the Fed is pretty much expecting and a signal that it will keep cutting rates over the next 6 to 12 months, down to probably, sort of high threes or 4%. Now, historically, just like, small and mid caps got absolutely smashed in 2022, the opposite applies. So, small caps do tend to outperform during a rate cut cycle, which we're, in the midst of. And also markets tend to do really well if a recession is avoided following the first rate cut. Now, if you look at the chart on the left, it basically shows you historical trends where, after the first rate cut, if you avoid a recession, markets do really well the next 12 months. And so far it's playing out since the first rate cut this year. And obviously, if we do fall into a recession, then, the whole narrative will change. We do not believe the US is about to fall into a recession. And also, now that we have the US elections and that uncertainty behind us, we believe, and many others do, and so do the markets, that the new Trump administration and their focus on cutting regulations and taxes are going to unleash really significant GDP growth in the US, which will be very positive for their economy and obviously for markets. We've all heard about DOGE, the Department of Government Efficiency, with Elon Musk and Vivek. And, if they could just do a little bit of regulation cutting and efficiency in the US government, the GDP growth unleashed in the US will be something spectacular. So watch that space, whether they can deliver. Now, on the right-hand side, we can see basically the S&P 500 since its peak in November 21, it's actually not only recovered, but since a year ago, it's really outperformed the previous high of 2021. Whereas the Russell 2000, which is basically the small cap index, it's just now kind of, breaking even compared to its recent highs in 2021. So essentially what we're saying is that small and mid caps, and, the US is the same as Australia, has significantly underperformed the large caps, and usually they tend to outperform over the long term. Therefore, we believe there is a lot of latent upside in small and mid caps. And we believe that over the next 1, 2, 3 years, we're going to see small caps deliver much better gains than their larger counterparties. So we'll watch that play out.